For decades, China has been known as the world's manufacturing and trade giant, and its huge volume of exports kept the country's logistics infrastructure, from airlines to rail lines, humming. Airports were bustling almost 24 hours a day with international flights. Planes would take off and land at the airports of cities like Beijing, Shanghai, and Guangzhou. Hundreds of foreign business people would hop on a plane as soon as they finished their meetings, and millions of tourists would flock to China's tourist routes. Today, however, it is surprisingly quiet to see the usual crowds on Chinese streets, airports, and business centers.
China, first row. China, 67%. That's tariffs charged to the USA, including...
Especially after the recent record tariffs imposed by the US and the harsh trade policies of the Trump administration, the Chinese economy seems to be experiencing an unexpected slowdown. This picture has become clearer in recent days and has not only led to a noticeable drop in the number of foreign visitors. It has also left the terminal halls of airports such as Beijing and Shanghai almost empty. Boeing, one of the world's largest airplane manufacturers, is also stepping away from the Chinese market. It seems that while airlines flying to China are struggling to fill seats, the look elsewhere rhetoric of international companies is becoming a reality. Videos proving this point have broken sharing records on social networks. Recent videos show that at airports such as Shanghai Hongqiao, Beijing Capital, Xi'an Xianyang, and Urumqi Tianshandev, crowds are being replaced by empty waiting rooms and fly-fishing taxi stands. Just a few years ago, dense queues of international planes waiting for minutes to land were replaced by almost silent runways. Images taken at Shanghai Pudong Airport showed that most of the duty-free shops were closed, and the number of passengers was almost non-existent. On the same days, a similar picture emerged in cities such as Xi'an and Chengdu. At airports in Xinjiang in northwest China, terminals were completely dark and quiet. Direct US-China flights have dropped from hundreds a week to perhaps a quarter. Most of these are carrying cargo or minimal passengers. Even rush hour is not what it used to be. There are fewer announcements in the lounges, no taxi lines, airport staff said. In videos shared on social media, citizens reacted by calling what happened very frightening. According to Wang Changxuan, president of the Civil Aviation Association of China, China's aviation industry faces fierce competition domestically from high-speed rail, while internationally it is struggling with geopolitical issues. The Trump administration's high tariffs, especially in 2024 and early 2025, have dealt a heavy blow to the Chinese economy. The US imposed an average tariff of 35% on many products from China, and tariffs reached up to 50%, especially in areas such as technology, aviation, and chemistry. This has severely weakened the competitiveness of Chinese goods and services in the US market. Even tariffs of 20 to 25% in more traditional sectors such as textiles, electronics, and white goods have caused many American importers to stay away. Many people did not expect China, once known as the factory of the world and a country that broke record after record in exports every year, to be shaken to such an extent. But in the midst of the so-called Sino-US trade war, the trend of leading American companies pulling out of China is becoming more pronounced. Apple's plans to shift some of its production facilities to Vietnam and India, various giant clothing brands directing their supplies to countries such as Bangladesh and Indonesia, and Boeing is rumoured to have struck the final blow. This is because Boeing is not just a company that sells airplanes. It is also a giant that has established a large maintenance, repair, and parts production capacity in China. But Trump's tax policies have put Boeing in a deadlock. During negotiations with China, Beijing imposed a retaliatory 40% tariff on US aviation products. For Boeing, this means there is no choice but to withdraw from the region step by step. Boeing's withdrawal is of great symbolic importance, because the sale of airplanes in the Chinese market was one of the economic bridges between the US and China, as well as a source of employment for thousands of Chinese technicians and engineers. Giant airline companies used to divide their fleets between Boeing and Airbus, and the Beijing government used to strengthen its ties with the US by placing large orders with Boeing. Now, As this bridge is collapsing, the debate in Beijing continues. Can we buy airplanes from Russia or other countries? But Russia's civil aviation is nowhere near the international standards of Boeing or Airbus. Europe's Airbus, like the US, may not be able to sell aircraft to China as easily as it expects due to high-tech restrictions and various licensing problems. Moreover, even the demand for commercial aviation has been questioned. Airports are empty. The number of foreign passengers is said to have fallen by 70 to 80%. It is not convincing to attribute such a dramatic decline in the period coming out of the pandemic only to the fear of corona. So why are foreign visitors not travelling to China? There are several reasons. First of all, American business people are intimidated by the sharp trade tensions with the US. American investors, who used to attend monthly trade fairs in Shanghai or Guangzhou and meet face-to-face with suppliers, are now asking, if tariffs are so high, why stay in China? In addition, the Chinese government's harsh pandemic restrictions and the uncertainties experienced during the opening process have changed the habits of the global business world. Many companies that want to shift production to countries such as Vietnam and India have started to search for new destinations instead of travelling to China. This drove down the occupancy rates of international flights. The number of visitors from Europe is also said to have fallen due to the US effect. European companies are also shifting their product supply chain to other routes, citing the risks in China. On the other hand, there is no good news for the tourism sector. China's global tourism revenues used to reach billions of dollars. Millions of European and American tourists used to flock to this country for both business and sightseeing. While a recovery was expected after the pandemic, the opposite is happening. The US and many Western countries have still not lifted or partially updated their travel warnings against China. Political tensions caused by high tariffs are also complicating visa procedures. The result is chaotic. Hotels, tourist guides, local businesses and airports are quiet. Giant airports such as Beijing Daxing, Shanghai Hongqiao and Guangzhou Baiyun have almost empty corridors. So how does this silence reflect on the Chinese economy? Actually, the data shows it clearly. China's export growth rate has slowed sharply, especially in the US market. At the same time, foreign investment inflows have slowed. The Trump administration has announced record tax rates. It seems determined to undermine China's growth engine. This includes not only trade, but also restrictive policies in areas such as technology, aviation, and finance. Beijing is making strides to create a self-sufficient ecosystem, but this is not easy as it is dependent on foreign markets. In particular, the aviation sector has fallen into a huge void with the slow withdrawal of a giant like Boeing. The Chinese Comac C919 aircraft has the capacity for local production, but this project is still at a very early stage in terms of international acceptance. Other countries have begun to look for alternative routes to China, accelerated by the rhetoric of diversifying the global supply chain. The US has long supported the China Plus One strategy, which means shifting some production to other countries. The logistical crises during the pandemic, the shutdowns in China, and finally, these harsh tariffs may have opened the eyes of companies. Moreover, regions such as India, Vietnam, and Indonesia, which are favourable in terms of population and geography, are sending the message that we offer cheap labour and favourable investment conditions. This picture is also confirmed by the serious decline in the number of foreign investors coming to China. Empty airports indicate that not only tourism and fair participants, but also business representatives are staying away. Despite this negative outlook, the Chinese government continues with major infrastructure projects. Jinzhouwan International Airport in Dalian, which is planned to be the world's largest artificial island airport, attracts attention with a cost of £4 billion. However, at a time when the existing Dalian Zhoushuizi Airport is operating below capacity and demand for the new airport is uncertain, the necessity of this investment is being questioned. China's three major airlines posted their fifth consecutive loss in 2024. Air China posted a net loss of 2.4 billion yuan, an increase of 22% compared to the previous year. China Southern was the only major airline to make a profit in the first quarter of 2024, with a net loss of 747 million yuan. China Eastern, on the other hand, suffered a 24% deterioration compared to the previous year, with a loss of 995 million yuan. Behind these losses are factors such as low international travel demand, intense domestic competition, supply chain problems, and currency depreciation. In addition, the increasing popularity of high-speed trains and falling ticket prices on domestic routes are also negatively affecting airline revenues. There are also problems in pilot training. China Eastern Airlines announced that 89 trainees who were trained in the 2018 to 2021 period were removed from the training programs because they failed to meet the new evaluation criteria. This, combined with the pilot surplus and declining demand for flights, has led to a questioning of employment policies in the industry. Moreover, there are not only financial losses but also major operational failures. China Eastern often makes headlines with the tragic plane crash in a mountainous area, VIP passengers forgotten at the airport, and bulk seating problems. Staff costs are still high, the number of flights is decreasing, and the gap between supply and demand is widening day by day. This situation is not unique to the domestic market. Foreign airlines are also pulling out of China one by one. Airlines such as Virgin Atlantic, Royal Brunei, Qantas, LOT and SAS have either suspended or completely cancelled their flights to China. The frequency of flights between the US and China has dropped to only 24% of 2019 levels. Poland, Scandinavia, Australia, and even China's traditional partner Mexico are pulling away from the Chinese market. Geopolitical tensions, trade wars, limited passenger demand, and a loss of international confidence in China are behind this retreat. Economists now say this is not a temporary setback, but a long-term trend. China's tourism and investment appeal is hemorrhaging, giving way to suspicion and strategic retreat. The Beijing government is taking steps to turn the tide. In November 2023, Beijing took the unilateral step of visa exemption. Citizens of 9 countries such as Bulgaria, Romania, and Japan were granted visa-free entry until the end of 2025. Not enough. The existing visa period was increased from 15 to 30 days. The goal was clear: to attract foreign visitors back to China. Analysts, however, see the initiative differently. According to political commentator Tai Shan-kun, the decision is a clear indication that China is struggling to attract foreign tourists after the pandemic. Because not only the traces of the pandemic, but also Beijing's increasingly tough foreign policy have turned China into an unsettling destination for foreigners. Official figures may seem optimistic at first glance. 131.9 million foreign visits in 2024, an increase of more than 60%, but only 26.9 million of these are actually foreign tourists. Moreover, much of this increase comes from visitors already benefiting from visa exemptions. The real picture is still far below the 98 million foreign arrivals and departures in 2019. More importantly, despite this apparent boom, China's international airports are virtually deserted. At massive hubs like Shanghai Pudong, terminal halls are almost empty, even in the evening. There are no traces of the old queues in duty-free areas. Passport control no longer takes an hour, but only 30 minutes. The reason is obvious. No one is coming, no one is going. The question is, of course, how China will overcome this. Beijing is imposing retaliatory tariffs against the US, but this is discouraging American companies from investing in China. As in the case of Boeing, huge capital and technology firms are pulling out, saying, "Why bother with so many difficulties? We'll go elsewhere." Some news sources suggest that even Airbus is slowing down plans for new production in China. Some European businesses are worried about security and geopolitical risks. Although the Chinese government is trying to improve its foreign trade through projects such as the One Belt, One Road, international companies do not want to risk their profits in the shadow of a trade war that has escalated with US tariffs. The Trump administration's tough tariffs are not just a trade move. There is both a race for technology and a struggle for strategic influence. With the relative decline of China's aviation sector, The US is reshaping the huge aerospace market in line with its own interests. Although Boeing has its own internal problems, in the long run, withdrawing from the Chinese market was perhaps a move the US administration wanted. Let's focus on our own production capacity and reduce dependence on China for global transportation. The same logic could be applied to tourism. There is no need to go to China. There are alternatives such as Vietnam, Malaysia, and Thailand. As a matter of fact, many travellers get tired of excessive control in China, internet restrictions, visa procedures, language barriers, and move to other routes in Asia. In short, empty airports paint a picture of a China cut off from world tourism and business connections. It is unclear how much this picture disturbs Beijing. Perhaps they hope to revitalise domestic tourism by turning to their own domestic market. But China's economy is still highly dependent on foreign trade. Unless foreigners arrive or foreign trade picks up, giant cities may be deprived of huge capital flows. In the end, the answer to the question, why are airports empty in China, cannot be attributed solely to the pandemic or global turmoil. One of the biggest factors is the record-breaking tariffs imposed during the Trump era, which will remain in effect until 2025. These tariffs have made China more expensive on the international trade stage and paved the way for rival countries to step up. At the same time, visits from the US and the West have fallen sharply. Business has shifted to other geographies, and aerospace giants like Boeing have slowed down their projects in China and started looking elsewhere. All of this has shaken China economically and is creating a lull in many sectors, starting with airports. Looking to the future, it is legitimate to ask, will China survive this? China has weathered countless crises before, but this time, the global economic order and geopolitical dynamics are changing dramatically. New production bases like India, Vietnam, and Indonesia are emerging. The US, Europe, and allies are systematically developing projects to reduce dependence on China. Technology transfer restrictions and the imports that China relies on in countless sectors, from aviation to electronics, are at risk. So only time will tell whether this airport gap is a short-term jolt or a symptom of a long-term de-Chinization movement. Do you think this will lead to a forced reform process in China, or will Beijing try to continue on the world stage with a more closed and authoritarian model? Will the US tax wall and the withdrawal of giant companies cause permanent damage to the Chinese economy? Or can China overcome this airport silence with a move to revitalise the domestic market? You can share your comments with us. Don't forget to subscribe to our channel, turn on notifications, and like this post. In future broadcasts, we will continue to share with you behind the scenes of economic and political developments around the world. Goodbye.